3 of the 5 Nigerian companies listed on the African Unicorn list are financial technology companies. The fintech industry has been one of the fastest growing and most impactful to the startup ecosystem in Nigeria and across Africa, seeing a growth from 74 to 217 startups in the space of 7 years. More importantly, fintech companies have revolutionized various aspects of Nigeria's financial landscape, making it easy for anyone to receive payment for the goods or services they sell, creating access to credit for individuals and businesses, bringing millions of Nigeria into the formal economy, and creating a range of other innovations to the financial system. Nevertheless, a whirlwind of regulatory activity is threatening the industry in increasingly existential ways. As regulators create new rules aimed at tackling fraud, improving security, and preventing interference with the naira, we examine the impact of these new regulations and consider how much of Nigerian fintech will be left if they all go into effect.
Hello and welcome to Tech into the Future, where we talk about everything that's happening in technology and how it affects you. My name is Ngozi Madre-Kedozie. I look after Android partnerships for West Africa at Google.
My name is Tomiwala Likomo. I'm the CEO of Tech Cabal, a digital publication that's been covering African tech for the last decade. Alongside Ngozi, I'll be your guide into the world of tech in Nigeria, Africa, and the world. Welcome back to Tech into the Future. Our focus today is on the Nigerian fintech industry, the growing concerns about regulatory measures, and how they affect the fintech ecosystem, its customers, and the nation as a whole.
There seems to be an ongoing fire within the fintech industry in Nigeria, with the new regulators surfacing, the new regulations that have surfaced over the recent weeks. So,
the fintechs have changed Nigeria's financial system in increasingly fundamental ways. When they started, they were changing things on the margin, but now their impact is increasingly systemic, and their size can be mind-boggling. There are weeks when a single fintech generates half the volume on NIBS, the national switch. As regulators come to terms with those changes and the impact of these fintechs, the pace of regulation has increased. And sometimes that regulation can seem like it's less about sanitizing the ecosystem or making them work better than perhaps stopping their activities altogether. So we're going to explore that in a bit of detail today.
Today's guest is no stranger to the financial sector. He is the MD CEO Africa Operations of Inlaks Limited. He has decades of experience within the financial systems as CEO of Value Card Nigeria, CEO Central Securities Clearing System, and co-founder of Trans-Sahara Investment Corporation, amongst other roles. Welcome, Mr. Kyari Bukar.
Thank you.
Good evening, sir. Thank you for joining us today. Let's start off by speaking a bit broadly. As MD of Value Card, you're a pioneer of kind of the fintech industry. How would you assess the impact of the fintechs on the financial system broadly, from those days till today?
The progress that had been made over the 2 or so decades since the advent of Value Card and the electronic payments, as it was called then, those were the pioneers. I was sharing something with someone earlier today that, you encounter hurdles, you encounter lack of understanding and awareness, but the beauty of it is that you just continue to forge ahead. And the second thing is that you have to always be in constant touch with the financial regulators, in our case, of course, the central bank. And as time went on, the depth of understanding and awareness have increased in the entire ecosystem. So when we started in the early 2000s, there were just a few of us. You can count us on, we were probably 3 or 4 startups that had forged ahead. Today, the numbers are mind-boggling. the growth trajectory had been quite phenomenal. I think one would say that the impact on the GDP of the country, based on some of the studies done by Inside Communication and other bodies like Gartner Group, is a testament to what the contribution of fintech into the general economy, but particularly in the financial landscape, be it banking or in recent past e-commerce and the insurtech and clean tech and edutech. So there are a lot of things that had happened in the last decade or so that one can very proudly say that the impact of the fintech in the payment space and in the financial services space, as well as the overall economy, had been quite phenomenal.
Thank you for that, sir. So by and large, I think you would agree that it's a net positive impact that the fintechs have had in our economy.
Yes, indeed. And, when you come up with innovation and, many school of thought exists that you first start with the innovation and the innovation begin to attract attention. And of course, then the regulatory framework begin to come in. So in general, fintech has immensely added a lot of value to the economy, not only in terms of making financial transactions transparent, and it brings in accountability, but it also brought in a lot of efficiencies and convenience such that the overall GDP growth, I believe that as you include or grow the technology or payments for every 10%, it adds to about 1% of GDP growth. So essentially, it's an overall impact to the economy had been quite phenomenal. And look at the kind of jobs it has created, the taxes these entities have been paying, and all of those basically add to the value, not only the value creation, but indeed the value capture that had come out of the phenomenal growth that the fintech had brought into the Nigerian economy.
Okay, we're tracking a number of recent regulatory announcements that operators in the fintech industry have termed problematic. There's the 0.5% cybersecurity levy on electronic transactions, restrictions on new account openings by all the major fintechs. There's discontinued onboarding of customers by mobile money operators, revised IMTO guidelines that prohibit the fintechs from obtaining IMTO licenses, a restriction of payouts of the currencies that the IMTOs can pay, so everybody has to pay in Naira. And then there's a proposed discontinuation of virtual accounts. Before we go into the specifics of any of these issues, would you say they represent regulation as normal, or does this feel particularly aggressive in its approach to the industry?
The ones that you have cited, there is one that is of particular interest to me, which was this conversation around corporate governance and corporate governance framework by the apex regulator, that is the central bank, which is being under consideration. And I think that bodes well to any young and growing industry such as what we have in the fintech space. Now, the concerns that the recent pronouncements have brought to the nation is huge. One is the 0.5% levy. One needs to, before those sorts of pronouncements or these sort of things come out, the central bank used to engage the players so that there is a conversation that needs to happen so that one can understand the purpose or the main objective of the regulation. Now, in this case, I understand that the first Cybercrime Act was passed in 2015, and I understand that in that document it was 0.005%. We're not even talking about the amounts. We're talking about what is the intended purpose, because when one understands the purpose, then there are ways of addressing them, or the unintended consequences of this 0.5% levy for every transaction. Based on some of the numbers I have seen, which NIPS reference data of 600 trillion naira of transactions last year, 0.5% amounts to something in the neighborhood of 3 trillion. Even if you add the waivers and assume that half of that may not be counted, you're still talking about a massive amounts, and that may translate into anywhere from $1.5 billion to $3 billion. Now, that to me is not something that is going to be addressing cybercrime per se. It might be something else. And indeed, the banks and all the financial institutions that are heavily regulated have cyber security and cybercrime mitigation regulations that include board or the governance structure of those entities must be held accountable to by the regulator. Now, if you then talk about that, there are costs of compliance that the banks and other financial institutions have been incurring. Now, what this additional levy is going to bring is something that we need to fully understand. But the reaction, both outside and inside Nigeria, is negative, and I think we have seen even the pronouncement from the National Assembly and so on and so forth. Now, there are two points of view. One is that that was an act that had been passed, and it is within that act that the implementation came about, and the central bank is just following the process of implementation of the act. However, if something is onerous to society, the socio-economic impact of these sort of things with the current macro situation in the country, I think there should have been a rethink, and there should have been engagement with the industry, and what impact will it have on investors and potential investors coming into this market. I understand from some data that between in the last 5 or so years, the bulk of funds that have come in as investments into the tech ecosystem in Africa, the bulk of it, somewhere in the neighborhood of over 30%, came into Nigeria, Nigeria being the number one. And now these sorts of heavy regulations and levies may become something that would resist a potential investor from coming into this space. Of course, there are some other considerations, such as the others that you have mentioned, which includes the freezing of opening of new accounts, and in the name of KYC, AML implementation, compliance. What we need to know as industry players is, first of all, what's the objective? And there are many ways of overcoming those objectives. And I think when the regulator is talking to the players can come up with solutions that would optimally give the regulator the confidence and the assurance that we are here to fully comply with the necessary regulations, rather than have something that is more draconian and something that is akin to throwing the baby with the bathwater.
Thank you very much for that, sir. Let me ask, given the importance, the impact, the size of the fintech industry, especially as it concerns our GDP, our economy, etc., why do you have any sense as to why these engagements don't seem to be happening? The engagements between the regulators and the private industry, specifically the fintech industry.
Yes, I think partly it is the fault of the industry and the industry players. I'm one of those people that strongly believe in preempting the regulator. You know that these things are going to come anyway. Therefore, what do we as industry players within the fintech space look at the various issues, whether it is issues that have to do with fraud, that have to do with accountability, transparency, onboarding of clients, KYC, etc., etc. If we have that, then we need to have solutions, which we can then have it bounce, it with the regulator to say, look, this is what we feel are the critical pieces that we need to tackle as an industry. And of course, the regulator would, will give us the listening ear. And if we preempt and we approach the regulator, it is going to be different from we are silent, we are competing with one another, we don't even sit down and share things until it becomes too late. So we would rather be reactive, which is always not the best course of action. We should be proactive rather than being reactive. That is what I'm trying to say. And in preempting the regulator, in engaging the regulator with our own solutions to some of the intractable problems, and these problems are global in nature. It is not just Nigeria, it is everywhere. And by so doing, the regulator would also have an empathetic ear to the cause and also the solutions we're proposing. And that way we meet, we will come up with a win-win solution for all. Because at the end of the day, competition is one thing, but cooperate to have a level playing field is good for everybody. And competitive strategy and other things can then be worked out after we have cleared up the sandbox, so to speak.
Fantastic. I think that's really, really useful. Thank you. Some of the restrictions seem to restrict the ability of the fintechs to compete with existing players within the financial system. So things like the restriction are preventing fintechs from gaining IMT or licenses, or preventing mobile money operators from onboarding new customers. Is there an anti-competitive play, or are there valid reasons for the CBN to be restricting the fintechs specifically?
So the fact that we feel that the central bank is targeting, or the banks are targeting the fintech players is probably going to look, it will box the fintech industry into a corner. Okay. What I would rather like to see the industry do is to approach the regulator and say, look, with these things in mind, here are what we believe we can do as an industry to allay the fears that everybody else has, or the regulator itself has. And by so doing, the regulator, if there is rationality there, then they need to approach it. Because, whether we like it or not, the evolutionary path of technology is going to exist. If you shut it in Nigeria, it will come. It's just a matter of time. So once that innovation trend or the S-curve happens, the traditional banking, there is a space for traditional banking, but banks have historically been the entities that adopt technology. So the digital transformation is going to come in, and it might shift the leaderboard, so to speak. So the bank that had been the number one or number two bank 30 years ago may not necessarily be so today. And so is the emergence of fintech in this space. And what initially was a tiny speck is now becoming a large entity. And so we know that the regulatory issues will come around, and some of them may not be issues at all. Some of them are just how do I adjust myself to comply with it? Or can we anticipate it as an industry and come up with solutions? Because I do understand that there is even an emergence of reg tech, right? Regulatory technology players in the sandbox. And those are going to come and address some of the concerns of the regulator. But singling out a few players in the industry so that you want them out of the space may not necessarily augur well for the economy, for the kind of jobs it's creating, and also the potential for taxes that the government would be collecting as a result. So I do believe that the approach from the regulator should be rational, win-win approach. And all industry players will then begin to see that there is a path for the fintech industry and also a path of digital transformation that's going to happen in the entire ecosystem.
Thank you, sir. So let me ask, leaning on your experience, how does the ecosystem, which obviously is being impacted by this, make its case and engage productively with the government in a productive manner? What results should the ecosystem be aiming for?
Indeed, what we need to do as an industry is to constantly be in touch with government. And some things we may not like, some things we would love. And the other thing is to understand the purpose of any of the regulatory pronouncements. Ideally, preempting is always better. Proactively engaging is always better. And having a very strong voice. Some people call it lobbying entity or political action committee or whatever. Because look, majority of the fintech players are young people. And they tend to think that if I just put my head into my codes and develop the best app, that's it. The world will beat their path to my doors. Unfortunately, one is operating in a real world, and real world come with some of those inconveniences. It comes with those inconveniences, such as the regulator. And the regulatory framework must also come in. At times, it feels like they're going to straitjacket me. But what you need to realize is that the regulator's role is a balancing act between the consumers, the players, and the government itself. So there are so many stakeholders that the regulator looks at rather than me, who has developed this best app since sliced bread, and I believe that everybody would download this app and use it, versus why? What's the purpose? Yeah. Who is transacting? All the KYC elements, and so on and so forth. And that is where the regulatory constraints come in. And then for us as an industry, we should look at how best to comply with it. And if we were to preempt and say, oh, here are tools we have that would make it easier for you, Mr. Regulator, to come and look at every transaction that I do. So nothing is hidden here. And that may change the conversation. And they would say, these guys are doing this much. These guys are contributing so much to the economy. And if you have a draconian regulation, it might actually slice the job growth that these guys have brought to the economy, and et cetera, et cetera. So the unintended consequences of a heavy-hammered or heavy-handed regulation can be worse off for the overall industry rather than be beneficial. And the other element is that if it benefits just a portion of the industry, it's still suboptimal. So that's the kind of conversation that the fintech industry and the tech ecosystem in general need to think about and preempt the regulators.
Fantastic. I think it's a really pragmatic approach that you've sort of spoken to here today. Thank you so much for taking the time to speak with us this evening, sir.
Thank you,
It's
sir.
been a pleasure having you.
Thank you, sir.
Welcome back to Tech into the Future on Arise News. We just had a fascinating conversation with Mr. Kyari Bukar, and he talked to us about sort of his position and his thinking about the way the fintech regulations affect the industry and the economy broadly. It's been an interesting period for the fintechs, and I think Mr. Bukar has quite a pragmatic view on how they should be approaching this.
Yes,
what was your sense?
You know, let me say that one of the things, as he was talking, I was saying to myself, well, see, this is wisdom and experience, right, over the years, just having been in the industry for so long. If you were to juxtapose that with the fintechs that are, pretty nascent for all intents and purposes, this is probably where, the pragmatic approach, which is just, be preemptive, right? Be proactive, constant engagement with the regulators, telling them, here's what we're doing, here's what we're working on, seeking, even to a certain extent, counsel and advice, kind of just pulling them in, because once they're part of, it's like co-creating with them.
Yeah.
Once they are part of the creation, it's very difficult to turn around and then say, why are you doing X and Y and Z?
I think, look, we'll probably close it on the point that he did start with, which is the impact of this industry isn't just on the financial system. It's really, really significantly
so.
on the
On
economy
everyone.
itself.
Yes.
And so it's important that they get their act together in terms of sort of managing the regulators, because I think he gave the statistic where sort of like a 10% growth in the impact or in the use of technology on the financial system results in a 1% increase in the size of the GDP of the country.
Yes.
So there's a lot to be lost.
There's a lot to be lost,
if these companies aren't as innovative as they are.
And to be clear, just because that the fintech industry may not have done, all the proactive engagement doesn't make the circular any less draconian, by the way.
Yeah.
And the impact is also, remember, we were the ones that were told to go cashless.
Yeah.
And so now we're cashless. And
now you're making
penalized.
I mean, it would really be terrible if we push these things, we do these policies that push people back to cash, because it would basically waste all of the progress of the last sort of decade.
Exactly.
Or so.
And the thing is that in our impact to regulate a certain industry, we're now, all of us are going to feel the impact of this, right?
Absolutely.
So
yeah,
definitely.
Serious concerns, and let's hope that the industry does, take the bid to be a lot more proactive. Thank you for joining us today on Tech into the Future. My name is Tomiwa Aladikomo.
And I am Ngozi Maduka-Dozie. Join us next time as we take you into the business and impact of technology in Africa, how it's changing the world and how it's changing your world. Stay tuned to Arise News.